Today I'll be calling cable. My name is Wakar Meyer and I'm your Elliott Wave analyst, reviewing what has been and predicting what is likely to be in cable price action. So, since the last video, I believe that the multi-year triangle that I've been counting is over, and that this wave right here is the complete E wave. You had A, B, and C, or A, B, and C, depending on how you count it. Either way, I think it's over. So now if we were to go ahead and zoom into and this is a daily chart by the way, and before we zoom in, I'll just follow up. If you remember, a few episodes ago, I was talking about the Fibonacci support and resistance points, and I said that if it broke the first level, it had a high probability, about 89% chance of going to the second level, and as you can see, that clearly happened. Then about a 61% chance of going to the next level, and you can see that happen too. Now as you go past the third level, the odds start falling, right? They start going below 50%, and I think it hitting the fourth level right here that's just a good indicator that it's exhausted itself, and that sort of coincides with the count. So I'm going to go ahead and zoom into a smaller chart, 27 minutes. And I've got my new lines for the coming session, support and resistance. Let me get some of these technicals off of there. Disable. Now, you can see I kept my channel. I kept the 2-4 and moved it up to 3, right? So that channel's still here. And as you can see, as it fell back through the channel, it found support right there. And the way that I'm counting this is, I'm counting this as 1, I'm counting this as 2, and that's a running flat, and then I'm counting this as a smaller degree 1, and then this right here is a smaller degree 2. Now, in order for this count to hold, obviously it's got to keep falling, but it also has to stay below the 1.56035 mark, basically right here. So as long as price stays below there and begins falling through the channel, I think that'll be a good indicator that the call of that particular wave being over is a correct one. And then we would get the signal on this side where it would break, and of course that's an 89% chance that it would fall through to the next one. And I think that would be the trend developing into the other direction, and then we would start counting accordingly. So now that we have that structure counted complete and have a count with a bearish direction that has begun, I would like to take a look at cable on the larger scale, and that would be the monthly scale. And since I think it was 1901, maybe it was 1905, I don't remember the date exactly, cable has been falling, okay? In 1985, it seemed to find support right down here at 1.052. And then since then, what I believe it's done is it made a zigzag up, it made a 3-wave correction, and then another zigzag up. So I believe that the approximately 85-year drop is labeled A, okay, because I counted it as 5 waves. So per Elliott Wave, we should get a 3-wave correction, and then we should get another 5-wave drop that would go below 1.05. Now, this is going to be a very long correction. We're only, maybe halfway through it, the dot B level. Okay, so this entire wave that was 85 years I'm calling it dot A. Okay, now that means we're in dot B, and I think we're still a lot of years away from dot B being over, but I just kind of wanted you to see the bigger picture and see where I think price action is going. And where I think it's going is short. We had a zigzag, a correction, another zigzag, And for technical purposes, that all counts as one zigzag, a 535. So now you should see when A is 3 waves, B is going to be a flat or a triangle. Well, it doesn't look like a triangle is developing, so therefore it should be a flat. And if we do the measurement, I've already done it exactly, but I want you to see it. You can see that in order for it to be a flat, B has to retrace 90% of A, and you can see 90% is down here, right? The exact number is this yellow line, which is 1.1584. So the B wave also generally alternates with the A wave. So if the A wave was a 535 in the long direction, you would expect the B wave to be a 335. And in real time, many years ago, I counted this as 3 waves. Elliott Wave International counted it as 5 waves. I disagreed. At the moment, it would appear that I'm correct. We'll see how it plays out. But 3 waves, okay? When A wave, once again, is 3 waves, B is a flat or a triangle. Well, in order for it to be a flat, it would have had to have rocketed up 80%, or excuse me, 90% all the way back up to the origin. Could even have gone higher. Could have gone 138% of A in the long direction, but it didn't. It started moving sideways in a very tight, you know, price action on a relative basis that's been going on, like I said, since 2009. This was A, this was B, this was C. All the way to here was a complex, or excuse me, it was a simple D, but it took longer in time. C was the complex wave. And then we had E, which terminated right here. Now I think the whole thing is over. And as you can see, also per Elliott wave principle, the E wave generally massively undershoots the trend line on the top, or it breaks it in a sort of a false signal manner, but you can see that's not going to happen. So now I would expect a C wave in the short direction, and I would expect that to be 5 waves. Whether it's going to be an impulse or a diagonal, hard to know. We'll just wait and see how it develops. My thoughts are it'll probably be a diagonal because I would like to see an impulse. A diagonal will just make the trading harder, so that's just my take on it. So we should see it move down to this 1.1584 line. Could go lower than that. Could go, 138, which would be a good bit lower. I think that takes it down to like 0.6 or something like that. Okay, well, we'll do the measurement real quick and see. So 138, yeah, 0.67. So it could actually fall all the way down to this 0.67 level. Don't know. We'll just have to see how that plays out. But at a minimum, 1.15. That would then complete the B wave of the same degree of this A wave. So you'd have a B wave down here. And then I would very much expect it to move 5 waves in the long direction, probably to 2.66, okay? And that would be a 38% retrace of the movement from 1901 down to 1985, okay? Now, here's the other thing too. I counted the last part, and you can't see the whole thing. Obviously, my chart ends or begins here somewhere in early 1971. But this is the 5th wave, okay, of that 85-year movement, and I counted it as a expanding diagonal. So there you have that. Forgot where I was going with that, but either way, I would expect the retrace to come up about 30, to do about a 30%, 38% retrace of the entire movement down. B waves typically do about a 38% retrace, and on a large scale like this, Elliott Wave sort of adheres to Fibonacci percentages and numbers better than in the short term. So if we were to do a price extension, you can see that C is normally about 161 relative to A. And as you can see here, if we use just the 90%, that would be almost a little bit more than 138. And if we moved it down to 0.94, that would be a C relative to A, 161%. So, and that would get us to the 138, or excuse me, the 38 retrace nicely. So that's that. And then, of course, after it achieved that goal, or not goal, but target, I would expect it to start falling again. So you'd have, this whole entire thing, 85 years to be A, however long this turns out, all the way back up to 2.66 to be B, and then it would start falling again. Obviously, this is going to take decades. That would be the thought on that. So anyway, that's today's call, and I would like to also tell you that in a separate video, I'm going to do 4 other pairs. I'm going to do the Aussie, the Swissy, the Euro, and the Canadian, also the Yen. I'm just going to give a big picture view of where I think things are going. So if you want, tune in for the second video. That's going to cover 5 other major pairs, give you sort of a big picture perspective. I think they're all at critical points, critical junctures, long-term junctures, and I'll be talking through what I think for those videos. So this was slightly longer, but we're at a major junction, and I thought I'd sort of look at the bigger picture so we stay on track. That's today's call. I'll hope you join me again for tomorrow's call.